Today in the crypto space, we see the market taking a bit of a hit. Bitcoin coming down approximately 2%, right around $113,000. Ethereum right around the $4,600, deep in the red, down approximately 7%. And the altcoins, guys, the altcoins are currently bleeding out, coming down to lower levels. We have some double-digit dips across the market. And the question is, should we be buying? In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator. But more importantly, I want to talk about one heavyweight large cap altcoin, Near Protocol. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunity. Whether we go up or down, bearish, bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is, it's absolutely free. All right, guys, let's begin. Let's see what's going on here, because I do sense the negativity. And the reason being, of course, we're getting a bit of sell pressure. $4 trillion, guys, we're hesitating still right around that level. It's very psychological level, $4 trillion market cap for the entire space, with a bit of trading volume on the dip. We don't like that, of course, starting the week fresh with this dip. But guys, you know, it's about to happen, right? This is what we've been planning for. This is what we've been preparing for. And this is why I've been saying, guys, no fresh longs. No Ethereum fresh longs, no Bitcoin fresh longs. Watch out for those altcoins. Only be hunting for those bottoms. Look for great risk to reward ratios at the bottom of structures. Because what we're noticing right now is, although there are some dips in the altcoins, and that's clear because, of course, a bit of fear in the market drags the altcoins down harder than you would ever expect, of course. But the most important thing is that even if they do dip, they're still within structure, which means that if they go to the bottom of the range of that structure, all good. Guess what we got to do, guys? Have the convictions to buy the dip. And that's a big mentality, because when we're grinding to the upside, melting to the upside with lots of green candles, it is very important that we can stay consistent in understanding that if Bitcoin and Ethereum dip, which is what we're seeing, the altcoins will dip, and we want to make sure that the altcoins will have support nearby. This is why it's important to be buying in from a position of strength and buying the bottom of the range when both Bitcoin and Ethereum are looking toppish in the short term. Toppish in the short term. Okay, guys, so we have to understand we ride the peaks and the valleys. Even on the lower time frames, we have to be prepared, because these last few dips could be the last few dips where we start to see a lot of the altcoins start to go parabolic if we're going to have a proper season. We see Bitcoin coming down, making a lower low, not a good thing, right around 112,000. It's almost at that level where I think that we might hunt some good liquidity, make it worth it for this dip. In a way, it's like, you know what, might as well just get it done. And if it's not going to happen, you might as well start moving, guys. Reality is I'd rather just get this volatility over with. Ethereum is in the same boat. It's down 7.2% in the last 24 hours, although based on market structure, as you can see on the 1 hour fractal, it is still okay in the sense that, you know, it could be a Bart Simpson. The bigger pain is down at the bottom of the ranges. That's where max pain is for the Ethereum chart. It's a lot more emotional if we do see Ethereum come down there, and it is just based on the altcoin season narrative. You know, Ethereum coming down is not a good thing. It could happen, and it would be a good thing for those of us that want to buy the dip. Okay, so just keep that in mind. We are seeing some good grinders still, like BNB. Nothing's really phasing it. As you can see, still doing fine. Solana looks a little rolly over. Look at this thing. It doesn't look the greatest. You know, came down, broke the structure to the downside and made a lower low. And that's the thing. If we get a confirmation high, lower high, we might be coming down for a bigger dip to basically fill this imbalance below this huge pump that we got in the past. So these are things that we have to understand. Tron is front running that dip pretty hard. I feel like it's coming down a little bit more based on market structure again. Hyperliquid doesn't care. It's still grinding, still doing fine. And of course, if you're looking at some of the top gainers in the last little while, they're going to have bigger retracements, right? Because their imbalances are going to be much wider. There's going to be a lot more weakness below. And that means that, it's very likely that we see those dips. Sui coming down right through its pump. As you can see, it looks like the majority of the dip is done here because you can see it introduces a bit of emotion and liquidity. If we do get some support, that would be great. But I feel like, you know what? I think we've endured the majority of the dip already. Yeah, I'm starting to feel like within the next 24 to 48 hours, we should start coming up with a bullish thesis. I did do that shift about 2 weeks ago. I don't know if you guys recall, where I was like, guys, the market's too easy. The market's too bullish. It's time to get into a defensive mode and start building our bearish thesis, because it's easy to come up with a bullish thesis. When everything's running and everything's green, okay, just the trend is your friend, right? It's easy. The thesis is clear. So what we always have to do is, be a contrarian a little bit. Say, you know what? Okay, right now everything's bearish, as you can see for a good while now, few days. And if we are going to maintain a bullish trend and bullish sentiment, I feel like it's time that we start focusing on building our bullish, thesis, so that we're prepared and staying one step ahead. So that's going to be my transition in the next little while, looking into some bullish indicators on charts so that we can prepare to buy the dips. But as of today, guys, let it fall. As you can see, some projects are coming down more than expected. We have Aave 10%. It could be the beginning of a short-term downtrend here. You can see Athena, one of the better gainers in the last little while, is down also 10%, falling really quickly through this imbalance. And many others, guys. It's not just Athena, and it's not, look at even BitTensor Tau, 9.5% to the downside. Near protocol. This is a protocol that I want to talk about today, of course. What do we do with Near, down to 10.2%, falling Bart Simpson style, straight back for where it came from. And we just need to be prepared for those opportunities, okay, guys? I've had experience seeing these type of quick flush retracements, especially Bart Simpson style. They usually get responded to really quickly, to be honest. I remember, was it 2 cycles ago or last cycle? We had that Bart Simpson just before we started really cranking to the upside, and it happened so quick. I remember we got some news from Visa and some other financial institutions. I think it was PayPal, and then all of a sudden Bart Simpson style, and then boom, 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 we started moving, right? So this is the thing here. Like these flushes, if it is going to be a proper season where we're going to see altcoins flourish, the truth is that these flushes are meant to get you shaken out of your bags. Right, so we need a little bit more information before we get into that emotional state to start getting me flushed out here. There's no way that I'm going to be exiting my positions after fighting for a couple of years here throughout the bear market, trying to accumulate and prepare for this opportunity. Okay, guys, so this is how it is. We're seeing some dips. A lot of these projects are not, a lot of these fractals are not even making lower lows. Obviously, some are, but some of them are not even there yet. So let's not get overly bearish. I feel like if we start making bigger structural changes in the price action, then we can start being a little bit more worried and get into a defensive mode. But at the current moment, we're still okay. All right, guys, I know you're here to talk about charts, so let's begin. Let's see what's going on here with Near Protocol. But before we get into that, I want to take a look at what is Near Protocol. What have they been up to? Near Protocol is an AI project. It has its L1, it's got an Ethereum contract, it's got a lot of good stuff going for it. However, guys, it is a slow and steady grinder. As a large cap, should we be giving it our attention? Let's take a look at it in a little bit more detail. At the end of the day, we do see that it is a $3 billion market cap. It's fully diluted, pretty much there, and you can see trading volume is decent. Could be a little bit better for its size, of course. We need an ecosystem that's growing for it to get a little bit more. Guys, I do have a deep dive on Near Protocol. Go check it out. I think it would be very valid for you to get some information about what Near Protocol is all about. Feel free to go check out the deep dive playlist that I have linked below. I have tons of deep dives, over 110 deep dives of various projects across the market. So go check that out. Now, it's important to get fundamentally bullish, and this is what keeps me very interested in Near Protocol, because its fundamentals are not that, how could I say, shiny. Right? We have a lot of things happening with Near Protocol. And if you look at their socials just real quick, we'll get a sense of what they've been up to. It's blockchain for AI, no doubt. Okay, if you've been around, you know what I'm talking about. Everyone's building AI. Only one is building the future of AI. Okay, this is a post from August 12th. So I'm glad to see that they're active here on socials, not for platforms, but for people. And what I like about this is the next sentence: private, open, autonomous, and yours. What does that mean, yours? Self-custody. Now, if you look into it, guys, like I remember, like I'm just reminding you, I do have a deep dive there. And when I did the deep dive, what got me so interested was my experience that I had with AI, particularly the AI agents of this season. We are seeing that there are still projects, protocols, near protocol, that are doing it the proper way. Not like the others that we've seen already that were, pretty floppy. At this case, what we're waiting for is the slow and steady grind and building of a proper protocol that, again, is private, open, autonomous, and yours. So really, what we got to think about here is Near Protocol is not trying to be flashy and shiny. Near Protocol is trying to be a foundation, right? So provide proper tech, slow and steady, and it works. And I appreciate that strategy. It doesn't always have to be the fastest, doesn't have to be the biggest, it doesn't have to be, like I said, the most shiny, but it needs to work and be done properly. So I appreciate that. They got some media here to keep you up to speed on what's going on. We have some good swap kit has integrated Near Intense by Near Protocol, smarter routing, gas abstracted trades, some good relationships here. I appreciate those. Sharing is the only way with the AI economy can scale. So sharding is a big part of scaling, if you guys been around. So sharding can scale on chain. Very important stuff. Okay, that's a good piece of information. And I like this, guys. Inside the world of Near, co-founder is here. Speaking of self-sovereign AI future is Near. Okay, so guys, like literally, this is some of the vision that even myself, after doing a bit of research and getting involved with the AI agents of this cycle, the earlier ones that we've seen on the launch pads and all of that, Near Protocol really did make me aware of their vulnerabilities and their weaknesses, and Near Protocol solves all of that in a proper way. We just got to be very patient because they're building. Tomorrow, the first Near Con session titled Agents in the Real World, guys, this is where it's at. Okay, you got to really get up to date with what's going on here with Near Protocol. You have no choice but to really be bullish about it, because again, it's not, they're not building at the speed of light, but they're building quality, and I appreciate that. All right, guys, let's move on. Let's see what's going on here with these charts. Price action wise, Near Protocol has been, just kind of hanging out. Now, you got to understand that a lot of projects are just hanging out. So we can't be, hard on Near Protocol. We just have to understand that Near Protocol, even from a chart perspective, is not at bear market bottoms. You have to understand that it did come down. Of course, it ran up and it came right back down to, a retracement level. It didn't come down one-to-one to the previous low, but at the current moment, we are in a structure that kind of leaves us, undecided. Indecision in the market is very tough. Me personally, when I'm indecisive, I just dabble in. Right, I just buy the dip. I buy a little bit of, I pepper in some capital, and I like to buy in when the indecision usually comes when you see a market structure that is consolidating. We wait for, the demand or the supply to outperform one another. And as we get the data, as the data unfolds, I start to build my thesis, right? And at the current moment, I'll be very aware that, the bearish thesis is quite strong. And it's because we came in from an impulsive move to the downside. So what we're really paying attention for here is a reversal structure, a change of character. Now, as time is unfolding, as we see this price action unfold, as you know, I put this label here a good while ago, I am waiting for clues of a change of character. And usually that brings in some market structure changes or some data that suggests that we are no longer making lower lows or no longer making lower highs. At this current moment, if you look at these highs, they're all lower. And if you look at these bottoms, okay, this one was slightly lower if you include the wick, but the reaction was quite nice that we can even say, okay, maybe it's a double bottom. Okay, not bad. Now, ultimately, what we have to understand is we're still within range, even though Near Protocol has dipped approximately 10% for the day. That's expected, of course, when we see this volatility with the heavyweights. Even though it has dipped approximately 10%, you can see that it's still within this range. So there's still nothing really to worry about. The only reason that you would be worried at this current moment is if at this level you started to become a breakout trader and starting to pile in based on a breakout out of the structure. And that is very dangerous because you're getting into a position where you're buying local tops. You're not buying from a position of strength, buying the bottom of the range and putting a stop loss underneath your invalidation of your bullish thesis. The only way you're going to be bullish here is if you expect this to be a reversal structure. And based on that, your entry should be as close as possible to the bottom rather than the top. So you can see that price action is definitely respecting the 200 daily. Below the 200 daily is not a good place. I do see that the structure is being respected. And currently, if we break below these bottoms, there's no doubt in my mind that we're going to come down to the next order blocks and start looking for liquidity down here, maybe around $2, maybe a little lower. Right? Hunting liquidity at these bottoms is probably going to happen. And then the fear starts to set in. Well, what happens here? If we break here, we come down here. If we come down here, do we actually break down here and start calling this, instead of a change of character, we start looking for a break of structure for a continuation to the downside at the next major liquidity zone, which is bear market bottoms, very max pain. So what I'm doing here is, painting out like the possible picture. Like what should we expect and what should we prepare for? Well, range lows is definitely possible. Okay, hitting this level is very possible, right? Obviously, anything within this range, invalidation is very clear. Right below here is very important. So let me just quickly get some proper TA going here. I'm just going to make it very clear that if you're getting bullish right now, this is the place where you should be looking for entries. Okay, right now, this was the last point of interest. Okay, when you can see we're hesitating very nicely at this point of interest. And this point of interest for me was identified when we were up here. And pretty accurately, currently we're playing around with that point of interest. So what we got to do now is understand that this point of interest at this current moment is not that interesting anymore. Right now, this is the interesting place. In fact, the whole range should be interesting. In fact, right now, this should be interesting. Let me make it a little bit smaller. And I'll tell you why. It's because ultimately, you can see that on the lower time frames, we're dealing with a potential bull flag, right? So let me show you what I mean. Again, let me just use this tool right here. This tool is a little bit better for what I'm trying to show you. Impulsive move, retracement, right? We're consolidating. What happens after a while? This could be an exchange of hands right below resistance. We got two things of resistance, two confluent resistance levels. Liquidity, obviously based on this. We got these tops, obviously based on the trend line, right? Trend line liquidity is hot right here. And we also have the 200 daily EMA acting as resistance. If we can break out after an exchange of hands, the likelihood is we're going to get some great strength out of it. Why? Because we picked up bullish bids at this level. Right, we picked up some bullish bids, which was what we needed to get bullish, to have enough strength to break out of the resistance that's above. However, if we break below these bottoms, guys, it doesn't look good. So let me quickly put another line here, a white line. Let's put a white line nice and thick. You can see the liquidity zone, the volume gap, the imbalance below is definitely there. Let's get a red box going so we can really understand how we're going to play this range, because the range right now is the opportunity. Right, this is the opportunity. If we continue going red, guys, there's no doubt in my mind that we should definitely be thinking about accumulating at this level. Why? Because your invalidation is beautiful. You put your stop loss right underneath here. Let me just make this a bit thicker so we can make this super important. And we'll get the trend line a little bit thinner so it's not as important, right? So we'll just kind of do both. I like to keep myself a bit organized, but I know that I'm a bit of a mess here, but all good, as you can see. Now, if this does happen, continuation to the upside, bull flag, beautiful. Maybe we go for another attempt for a breakout. If we break below this bottom, we're coming down to range lows, which is the best opportunity to get into a risk to reward ratio opportunity, obviously down below. Now the question is, as we do come down, do we play games? Like, do we see market maker manipulation here? Let's say that we do come down. What happens at this level? Guys, be prepared for all kinds of mess. We can hunt this bottom, sweep the lows, and see a nice reversal in oversold conditions. Okay, so let's just keep this in mind for a second. Look at all the volume, market participation here, obviously at support, playing around with this right here. We got a lot happening, lots of volume in this area. This is fair value at this current moment. We're not oversold, we're not overbought. Fair value at the bottom of the range. Beautiful. Now let's take a look at oscillators, because oscillators might give us an edge. Let's get rid of this one for a second. Let's make this one a little bit bigger. This is Synergy Signal, guys. By the way, if you want to know more about this indicator, I got links in the description for you if you want to check it out. As you can see, we are definitely leaving overbought conditions right into here. We got a beautiful expansion to the upside. We did not make a higher high on that expansion. That's a sign of weakness from the bulls for me. Okay, if we do not make a higher high on this bullish response, then they do not have enough strength. And what happens is we need to come down and pick up bullish bids. As you can see, after that, the momentum has been in a downtrend. Let me just highlight this. You can see this right here is definitely in a downtrend, while price is somewhat double topish. That's class C bearish divergence. Okay, so that's not a good look. And then you start to see, okay, maybe we start to see this bullish response right here pretty weak. As you can see, we didn't even get overbought as we should, many times over and over. We get oversold and overbought in a very strong way. That response was quite weak. We got an Uno reverse right into here, and we came back oversold once again. Not happy about that. Right? Not happy about that. So there's a couple of things from a bullish perspective I cannot be happy about, which leads me to believe that the negativity is justified, to the point that I would expect and I would appreciate if we got oversold so that we can get it done, get the reset and momentum. Look at where the price lands at that level. Look for market structure and to see if it's respecting the previous lows at least. And then to start zooming in on lower time frames like the 4 hour, maybe even the 1 hour, and to see if we're getting signs of change of character, like again, a reversal structure, a smaller one on lower time frames. So we can buy the dip and slap a stop loss right below so that we don't take a big hit if we go down for a bearish impulse. Like again, I just got to be very clear. At these levels, we could get some very tough market maker manipulation, which could come sweep those stop losses and those liquidity levels, and then all of a sudden get that run. So what I would be thinking about here is spot only, low leverage only, right? Until we get the confirmation that we are breaking to the upside, a proper change of character. There is none yet. This, at the current moment, is a bear flag, continuation to the downside. We want a swing failure. We want to see the bears show strength and ultimately fail and get back in and then bounce. That's what we really want to see for a full confirmation of a reversal. And usually when that happens, we get market structures that resemble cup and handles, Adam and Eve's, particularly inverse head and shoulders, shoulder, head, and maybe a back test confirmation for a shoulder. And then we go up here, break the neckline, and we start, moving to the upside. So these are things that I want to look for, but it doesn't have to happen accurately like that. This is why the range is so well defined, and this is why I would say this. Obviously not financial advice, guys, but if you're bullish on your protocol, what I would be doing is just average in all within this area as best as you can, particularly leaving the majority of the capital to deploy at the bottom of the range if we get oversold. There's no guarantee, guys, but if we happen to have that opportunity, that's the place to buy. And then ultimately, guys, obviously there's a bit of a worry that this does turn into a bear flag after breaking down and making a lower low, maybe even back testing the breakout and confirming it as resistance, and then coming down for another lower low and hitting the $1 mark. Guys, ultimately that's going to be a little bit more. We're going to need a little bit more information if that's going to happen. What I mean is, if it breaks down, back tests gets rejected here as a confirmation or a dead cat bounce, then it's pretty ugly, because then we're in a downtrend coming down to $1. So we got a lot of work to do still to get that bearish. But at the current moment, guys, the range is being respected. So if we come down to the bottom of the range, you have to be accumulating at this level. And the next level to accumulate at would be to the breakdown and the next structure if we get one. And if that happens, you need to have that dry powder right now. You got to think about the dry powder that you have. The stables that you have are your tools to make it happen. Without dry powder, you won't be able to average in and drag your average cost down. So the most important thing at this current moment, if you are bullish, is to ensure you have that dry powder. Guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is, it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip.